That moment of panic is real. You've finished your tax return, you know you did everything right, and then you see that number at the bottom, the amount you owe. And it's more than you have in your bank account. Your heart sinks, and your mind immediately jumps to the worst-case scenarios: liens, levies, garnishments. I need you to take a deep breath. The IRS is a collector, but they are not an unreasonable monster. They have a system for this exact situation, and if you approach it the right way, you can avoid financial disaster. This video is your step-by-step guide to setting up an official IRS payment plan, known as an installment agreement. We are going to walk through the entire process, from determining which type of plan you qualify for, to submitting your application online, to the insider tips that can save you money on fees and penalties. You have options, and by the end of this, you'll know exactly how to use them. The very first thing you must understand is the most critical rule of all: file your tax return on time, even if you can't pay. This is not a suggestion, it is the single most important piece of advice I can give you. The failure to file penalty is a brutal 10 times harsher than the failure to pay penalty. If you file your return but don't pay, you'll face one penalty. If you don't file and don't pay, you'll be hit with two separate, accumulating penalties that will spiral out of control incredibly fast. So, no matter what, get that return submitted by the deadline. The clock on the failure to pay penalty only starts ticking after you've filed. So, you've filed your return and you now have a balance due. The IRS will typically send you a notice, often a CP-14, which is your first bill. This is your official starting gun. It's time to assess your situation and choose the right path. The IRS offers several types of payment plans, and choosing the correct one is crucial for both your wallet and your peace of mind. The first and most favorable option is the short-term payment plan. This is if you can realistically pay off your entire debt, including penalties and interest, within 180 days. The huge advantage here: there is no setup fee. You simply need to call the IRS or set it up online, and they will give you that extra time without charging you an upfront cost. Now, if you need more than 180 days, you're looking at a long-term payment plan, also called a guaranteed or streamlined installment agreement. This is where most individuals find themselves. To qualify, your total tax debt, including what you owe for the current year and any prior years, must be under $50,000. If it's under $25,000, the process is almost automatic online. You propose a monthly payment amount, and if it meets their minimum, it's typically approved instantly. The setup fee for these long-term plans is lower if you set it up online and agree to direct debit payments from your checking account. Let's talk about those fees for a second, because this is an area where you have control. The standard user fee for an online long-term plan with direct debit is much lower than the fee for a plan where you manually make payments each month. The IRS rewards automation because it means they get their money on time without having to chase you. If you are a low-income taxpayer, you may even qualify to have the user fee waived entirely. This requires meeting specific income guidelines, but it's a crucial pro tip that can save you over $100. Now, what if you owe more than $50,000? The process becomes more complex. You'll likely need to provide the IRS with a financial statement, Form 433-F, which details your income, expenses, and assets. They will use this to determine what they believe you can afford to pay each month. In these cases, the monthly payment might be higher than you'd like, but it's based on your ability to pay. So, you've determined which plan you need. Now, let's walk through the actual process of applying online through the IRS website. This is the fastest and most efficient method. You'll need to go to the IRS Gov homepage and search for Online Payment Agreement. You will need a few things ready: your social security number, your date of birth, the mailing address from your latest tax return, and the exact amount you owe as shown on your CP-14 notice or your tax return. You'll also need your bank's routing and account numbers if you're setting up direct debit. The online application is surprisingly straightforward. It will ask you to verify your identity, confirm your tax debt, and then it will guide you to the different plan options. You'll select either short-term or long-term. If it's long-term, you'll be asked to propose a monthly payment amount. The system will show you the minimum payment required, which is generally your total debt divided by 72 months. You can always pay more than the minimum, but you cannot pay less. This is where a common mistake happens. People often propose a payment that is unrealistically high for their budget because they just want to get the debt paid off quickly. But if you miss a payment, the IRS can default your entire agreement, leaving you back at square one with all the penalties reinstated. It is far, far better to propose a monthly payment that you know, with absolute certainty, you can afford every single month, without fail, even if it's the minimum. Consistency is king here. Once you submit your application and it's approved, you will receive a confirmation letter. This is your contract with the IRS. Keep this letter in a safe place. It outlines your payment schedule, your monthly due date, and the terms of the agreement. Now, let's talk about the elephant in the room, penalties and interest. This is a tough truth, but you need to hear it. When you are on a payment plan, the failure to pay penalty is reduced by half. However, interest continues to accrue on the unpaid balance for the entire life of the loan. The interest rate is determined by the federal short-term rate plus a few percentage points, and it compounds daily. This means your debt will grow slowly even as you're making payments. This is why, if you come into any extra money, a bonus, a tax refund from a future year, an inheritance, you should make a lump sum payment towards your tax debt. You can do this at any time without penalty. Every extra dollar you pay reduces the principal balance and saves you money on future interest. It is also vital to understand what your payment plan does and does not do. While you are in good standing on an active installment agreement, the IRS will not pursue the most severe collection actions against you, like levying your bank account or garnishing your wages. However, the tax lien is a different story. If you owe more than $10,000, the IRS will likely file a notice of federal tax lien in your local courthouse. This is a public record that secures the government's interest in your property. It can impact your credit score and make it difficult to sell assets or get a loan. The lien will only be released after you have paid your debt in full. This is a crucial distinction that many people miss. The payment plan stops the most aggressive collections, but the lien remains as a public marker of the debt until it's completely settled. Finally, a very important disclaimer. I am providing this information for educational purposes to guide you through a process. I am not a certified tax professional, enrolled agent, or attorney. Tax law is incredibly complex, and if your debt situation is severe, involves large sums of money, or you are facing other financial hardships like potential bankruptcy, it is absolutely worth the investment to consult with a qualified tax professional. They can explore other options with you, like an offering compromise, where you settle the debt for less than you owe, or currently not collectible status if you have no ability to pay at all. But for the vast majority of people, the online payment agreement is the tool you need. So, if you're staring at a tax bill you can't pay, don't hide. Don't panic. Take control. Go to IRS.gov, use the online payment agreement tool, and set up a plan you can live with. Getting back into good standing is a process, and you've just taken the first step by educating yourself. If this guide took a weight off your shoulders, pay it forward by liking this video and subscribing for more content that helps you navigate your financial life with confidence.